Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play on Thursday. So this is a look at the small caps. We're going to be taking a look at the penny stocks here, and first up is AKG, ticker symbol AKG. It closed up 39%, so this was the big winner. As you can see down here in the chart, it closed above a couple of different key resistance levels. It got above the 100-day simple moving average, the middle Bollinger Band, the 50-day simple moving average, that was here at 85, the green line, and then it also closed above the red line, which is the 200-day simple moving average at 97. So that is going to be the key level to hold. It closed right at the February high close resistance level, right at $1, and just above that is the January high close. If it can break above both of those levels, the November high close will be the next big level to break, right about here. Okay, and then above that's 125. That'll be the high close from September. And if it can turn that 200-day simple moving average into support, it could possibly make a move back up to that 300-day simple moving average at 151. Now, if it pulls back below that 200-day simple moving average, that will be a signal that it's not ready to head higher. That would signal that candles are likely to consolidate and pull back into the bands, and that's where you could see that 50-day simple moving average tested. If you look down here, there was a nice volume spike. That was the largest volume day since back here in August. So big money behind the move, and yeah, there was a nice bull cross on both MACD timeframes. Okay, if you look at the AKG 15-minute chart, you can see here it busted out above all the moving averages in the first candle of the day on Thursday, and it continued riding EMA 4 support. That's the pink line higher all the way into the close. As long as 984, as long as this pink line's holding, that's going to be your signal the chart's really strong. You know, it did pull back to EMA 8, the lime line, and that held. Once those two levels finally break, you want to see that middle Bollinger Band hold currently at 92. If that did break below that 92 level, that would be a signal that it's taking a little breather and possibly going to consolidate. Okay, let's look at OCX. Okay, this did close up 61%, so yeah, this was the big winner. Okay, and so this was actually the large percentage gainer on the day on Thursday. Keep an eye on RSI above 50. That would signal the chart's heating up. It's now above 30, and then you've got Fasto now above 50 there at 57. A bull cross on ADX with plus DI crossing minus DI to the upside. And so yeah, this has been in a really nasty downtrend since the middle Bollinger Band support level broke back here in December. You can see the close below the dotted purple line. That's also the 20-day simple moving average. It failed to get above that level in January when tested. You know, failed to get above that level in February, and then finally we're back at that level here in the end of March, the last trading day of March. And so going forward, it's going to have to stay above the middle Bollinger Band currently at 208. So it did close at 210. So that was the first close above the middle Bollinger Band since way back here in you know, the third week of December. So yeah, this is gonna, it needs to stay. If it can stay above that level, then what you're looking for is a break above this 220 resistance zone, and then a possible run up here to the 50-day simple moving average at 307. If it pulls below that middle Bollinger Band and closes below, that'll signal it's not ready to head higher, and it could pull back to test the EMA 13 at 179. If it did drop back below EMA 4 at 164, that would once again make it a risk to hold. You know, it's a major risk to hold when it's riding EMA 4 resistance lower. There was a big volume spike on Friday, but there was also a long upper wick on Friday's candle. So you can see this upper wick here. And so the upper wick represents profit taking. So people were taking profits into the close there, driving it down. So there could have been some dilution on Friday as well. As you can see here on the chart, at 1 o'clock, there was some profit taking on Thursday. The big red candle, the candles worked back in. You know, this had the Eiffel Tower look to it. You know, look at that parabolic spike and then the pullback. It did hold the middle Bollinger Band. Okay, so that was the dotted purple line. That was a nice bounce off that level. It needs to hold 199. If you see it drop below $2, that'll be a signal it could consolidate, and then it really needs to hold 190. If that broke, then the 300 simple moving average at 172 would be on deck. To the upside, you're looking for a break above 225. If that happened, then it would put that 270 high close back on deck. Okay, so keep an eye on OCX, and then we've got a GALT here, GALT. Okay, so check out this one. It closed up 25%. It's back above the middle Bollinger Band. You got RSI at 53. Fasto at 66. So they're both in the bull zone with more room to run until overbought levels. There was a bullish crossover in ADX. Check out how the green line crossed the black and the red line to the upside. So that was a nice crossover, signaling the bulls are heating up. There were multiple red candles in a row, so you can see the pullback, and so there was a nice bounce here. The close back above the middle Bollinger Band and the 50-day simple moving average at 460. Okay, and the middle Bollinger Band's at 466. It needs to stay above both of those levels. If it pulled back below, that would signal more consolidation. If it holds, it could get an uptrend going. It's basically been in this channel, and so what you're looking for now is a break above 5 and then a run up to the top of the channel, which is up here in this 540 to 550 resistance zone. Notice there's also this descending resistance line, and yeah, that's going to be a big level to break right about 550. So you've got descending resistance and horizontal resistance because you have the high close right here and from the high close in March, and so those are both lining up at about 550. If you can break above that, then you have that $6 level back on deck, and that was the high close back here in January, and so a close above 6 would be that signal. Okay, yeah, it's finally ready to break out higher. You know, it's in the sideways channel right now. It's in the middle of the channel. The bottom's down here at the 100-day simple moving average at 383. That level needs to hold. If it dropped below that 100-day simple moving average, then you could see that 200 and 300-day simple moving average down here in that $2.75 to $3 support zone tested. Okay, let's look at SENS. So, okay, so this only closed up 7% on Thursday, but the big thing is there was there must have been some after hours news. This had gapped up and after hours trading, and so it did close at 362. And so yeah, keep an eye on it. What it needs to do is close above this high close from back here in October, and so that's right at this 360 level. It closed just above that, and so it's hitting this resistance zone from October. If it pulls back below 360, what you want to see is the high close from March at 320, and that's lined up with the high from January. This is the big level, this 320 zone, and so you want to see 320 hold on a pullback. If it does hold, then it needs to break above 360. Above 360 will signal that it wants to head higher. Okay, so keep an eye on SENS. If you look here on the weekly chart, okay, this is smoothing out the data on the daily chart, and so you can see the 320 resistance zone. That was the high close here in March, and so if it can get above that, then you have this about 350 or so from October, the high close, and then above that is that 360 level. Okay, so that was that high in October. Notice how this is right at the same zone that it closed at, and so it needs to get above that 360 level, and then you have the fours on deck back here in this what is this, August through October of 2016. That 4 to 410 level was a big resistance zone, and so you could see a break from 360 back up there to test that level. Okay, very good volume down here. So yeah, keep an eye on SENS on Monday. Okay, we'll see if it can follow through. Keep an eye out for a black candle. So if SENS starts forming a black candle, starts trading below the open on Monday, that's going to be a red flag, and that's going to signal that it could, you know, after having a gap up open, the candles could work back into the bands. So major red flag if it trades below the open. So keep that in mind on Monday. Okay, look at CDMO. All right, this is another one. So check this out. So it closed up 17, almost 18%. It has RSI at 62, so there's room to run until that 70 overbought level. Fasto's back in the power zone. It's up there at 97. You've got the crossover here on ADX, so it's heating up. And so it had the nice close above the 50-day simple moving average. We always like that setup if it can stay above. That's currently at 289, so it needs to stay above 289. And if it does pull below that level, as you can see back here, there was a gap in February. So there's a gap between low of day on this candle and high of day on this candle. And after it gapped down, it formed this sideways channel. And on Thursday, it finally broke out of the top of the channel. The top of this candle was the top of the channel. There was a breakout above and a close above the 50-day simple moving average. So that's setting up a gap fill. The next resistance isn't until the top of the gap resistance level. So that's the bottom of this candle here. And so if it can get get through this 315 zone, you're looking for a run up here. That you can see here, there's the 100, 200, and 300 day simple moving averages all converged between the 360 and 380 resistance zone. Okay, so keep in mind, anytime you hit the top of the gap, when a gap fills, that's always a huge resistance level to break. It can be as tough as trying to break the 200 or 300 day simple moving average. So keep that in mind if it gets tested on Monday. All right, take a look at AVGR. All right, it closed up 14%. It's trying to heat up. You can see RSI is finally above 30. You can see it was below 30 for an extended period of time. They really had this thing going sideways. And so, yeah, this is one of those frustrating stocks that's trying to heat up. You can see here it did have the bull cross, so it finally has plus DI, that's the green line, crossing over the red line, minus DI, and above ADX, the black line. And so that is a signal that the bulls are heating up. You know, it's been a while since it's had a bullish crossover on ADX, and so this it's not out of the woods though, but there was a bullish development. You can see this long sideways channel, and so that's what happens when a stock drops down and starts finding support. And look at the Bollinger Bands. So this purple line right here is the upper Bollinger Band, and then the lower Bollinger Band was down here off of the chart. And notice how they've come together and how they're super tight right now. Here's the lower Bollinger Band, here's the upper Bollinger Band, and so there's not much space between the two. And so that signals that a move is imminent. There's either going to be a break through the top, or there's going to be a break, a drop through the bottom. And usually when you get a really tight Bollinger Bands like this, the move is explosive. So you're going to have an explosive move in one direction, and so the jury's still out on what direction it's going to break. It's leaning towards the breaking out to the upside, but it did head fake. If you look back here on the 19th, the annotations on this chart were from this day on the 19th when it finally got above the middle Bollinger Band. We're like, okay, yeah, it's heating up, but it has to stay above that level. And you can see it spent several more days until on Thursday it finally closed back above. It got above the top of the channel briefly, which was the top of this white candle here, and it looked like it was trying to get above. Basically, we want to see it get above 150, and then the bottom of the gap will be the next big level. Right here around 180 or so, 180, that 180 to 190 resistance zone. And if it can get above that, if you see it close above this level, then that's where you could see a run up to 250. You could see a test of the bottom of the gap, and then possibly, if it kept pushing, you've got the 50-day simple moving average up above. But basically, the big move would be to come up here and fill this gap. It could keep going sideways. There was huge volume. Look at this volume spike, right? But they did pull it back. And as I was just mentioning before about the black candle, there was a black candle that formed. And usually if you look here, here's a black candle, and then a red candle followed, and then here's a black candle and a red candle followed. Usually it's not a bullish sign when you get the black candle. They ran it up and then they pulled it back. They keep but there are multiple volume spikes down here, so it looks like there could be some loading for a potential pop in the future, so keep an eye on it. If you see it trading above 150, that should be a signal that it's wanting to head higher. I would watch the 15-minute chart and make sure that it is bullish. Okay, take a look at ZN. So those were some, I showed you a few different of the healthcare sector stocks, and so now I'm going to show you a few energy sector. I know I started off there with the gold. I started off here with the gold mining, and then the next stocks were all from the healthcare sector for OCX and for GALT and for SENS, and so all those were for the healthcare. And so now I'm going to show you a few for the energy sector. And so here's ZN. This is the stock had a really big bounce. Okay, so on Wednesday of last week, check out this bounce down here. It came the lower wick on Wednesday's candle came all the way down, and it hit the 100 and 200 day simple moving average support zone, and the bulls were able to drive it all the way back up above the 50-day simple moving average as well. And then there was follow through on Thursday with the close back above the middle Bollinger Band up here, and so it has to stay above that middle Bollinger Band, currently at 474. That's the big level to stay above. If it can hold that 474 level, then you're looking for a run back up to the top here, which was on the 21st, and that'll be the big level to break. It has to get above this 550, we're calling it, resistance zone. If 475 it turns into resistance, that's going to be a red flag, and then you can see it pull back and retest this 50-day simple moving average. So it's going to be all about staying above this resistance level. You can see all these wicks hit this current resistance zone, and so yeah, this is going to be a big level to break because it's back in this previous channel. You know, it dropped back into it, and so it has to break out above again. And so if you look at the 15-minute chart, you can see how it had the big drop. It had, you know, it was trading above the, you know, it was stalling out here at the 100 simple moving average. It dropped below the 300, and that's where it lost all support. There were no other moving averages below, and so it came all the way down here on Wednesday and found a bottom at 2 o'clock, and then you can see huge volume came in and drove this thing up. It closed above the middle Bollinger Band on Wednesday, and then on Thursday it got above the 50 simple moving average. That was your signal. It was really heating up, and then it got above the 100 simple moving average over here. That's the current level to hold at 456. If you see it drop below 456, that's going to put the middle Bollinger Band at 437 on deck. Really, it's going to be a major red flag if it drops below that 450 support zone, and if it definitely will no longer be in play for a long trade. If it drops below that middle Bollinger Band, it will be a risk to hold again, and so what has to happen is it has to get above the 200 and 300 simple moving averages. If it fails to get above this 490 to $5 resistance zone, it's going to signal a temporary top. And so this is a huge level on the charts. You want to see it trading above 5 if you're a bull. If it struggles with $5, you could see some consolidation. Okay, let's look at EVEP here. Okay, so EVEP is getting above the 30 oversold level. It's yeah, it's been really beaten down. It's trying to heat up. It's still oversold on Fasto at 11. Yeah, sorry about that. My mouse is acting up on me. So yeah, it's been trying to get above EMA 4, and that finally happened again on Friday. So that's why I'm showing you the chart. It closed above EMA 4 on the 21st, and that was the first time after the gap down. There's a gap between low of day on this candle and high of day on this candle, and so this red line right here is the bottom of the gap. And so what we're looking for now is for the pink line to hold. If it can hold 17.3, then it's in play. But as you can see here, it closed below the next resistance level. It was trading above it intraday. That's EMA 8, basically at 19. And so it has to get above 19. If it can do that, then you're looking at EMA 13 and this close from the 21st, which was also the open from the 14th. That's a big resistance level. If you can get above both of those, then it's the bottom of the gap will be the next big level to break. So you could possibly get a run between 19 and this, 23 and bottom of the gap around 26 level. If it did break above the bottom of the gap, then you'd be looking for the middle Bollinger Band at 34. Now, if it drops back below EMA 4, that'll signal more consolidation. It's not ready to go. It's only in play if it stays above that level. As you can see here, people that loaded on the 21st, they replenished with that gap down open on the 22nd. So you have to be really careful. These dead cat bounce plays that are in a downtrend on the daily chart are some of the riskiest trades to make. It's really hard to go long when everything's going downstream. Okay, look at the EVEP 15-minute chart. You can see here it's got this symmetrical triangle type pattern. You've got the descending resistance, and then you have ascending support, and so it's coming to a flex point. Okay, so it has to break above the descending resistance. Okay, so above 20, it basically it needs to get back above the middle Bollinger Band and the 50 simple moving average. They're at 19 right now, and so if it can get above 19, then it'll be signaling that it wants to head higher. If it struggles with 19 on Monday, that's going to be a red flag, and you could see it pull back and test this support zone down here, but between this is the 100, 200, and 300 simple moving averages. Basically, you could see it drop down to 17. So that would be the downside risk. If it dropped below those moving averages, then you could really see some consolidation. There was some huge volume here on the 28th. You can see the big volume spike on that big push, but they sold it off. You can see that big pullback. So that was some, it's difficult to read, but yeah, be very cautious with that one. There's a lot of dilution going on. Okay, so a lot of people were trading ENRJ. Okay, ticker symbol ENRJ, and people were wondering what happened to it. And so if you look here, they had a merger. Okay, and so now the ticker symbol is trading under UAVS. All right, so they've got this new merger happening, and so it happened, and so now ENRJ is under UAVS, and so if you want to trade ENRJ, this is the new ticker symbol. So I'm going to show you the chart, show you what's happening with it right now. I think a lot of interest has been lost. People have no idea what the ticker symbol is, and so the volume was only 290,000 on Thursday. It did close down 21%. It is pretty beaten up right now. If you can see, Fasto's at 8.72. It is at a low level, technical bounce zone. Fasto or RSI is at 45, so it needs to get back above 50. That'll be a red flag if it stays below 50. Yeah, the chart, it had that nice move on the 19th and 20th over here. So the pre-merger hype, and then they pulled it back, and that now it's down here below the 50-day simple moving average at 477. It has to get above that level. All the moving averages are lined up, so it's got some serious work to do, because you have the 300, 200, 100, 20, and 50 simple moving averages. 50 days, these are all the simple moving averages, and then you have EMAs 4, 8, and 13. So basically all the moving averages that we follow are all kind of converged in the same zone, and so which makes it really tough to break. It got above back here on the 20th, but it failed to hold. It would have been really bullish if it stayed above this 300-day simple moving average. That's the big level to break at 766. Now after this big pullback, it could get a bounce, and that's what we'd be looking for. If it did drop below this 430 support zone, that would be a major red flag. You'd be looking at a drop back down to this low. The low of day was what was that, at 355, and as you could see here, when it had this long consolidation, the bottom of the channel was down here around this 350, 360 level. So major red flag if it fails to hold support here. You could see it pull back much further. Yeah, if you're looking to play the bounce, the key is to follow the 15-minute chart, and as you could see, the candles broke below. They were above all the moving averages here on the 28th, and then they dropped below on the 29th, and so it has to happen now. Okay, it is trying to heat up. The candles are above the middle Bollinger Band at 414. If that level holds, it could get a reversal going. Now, many times it's good to wait until it gets above that 50 simple moving average and turns it into support to heat up. It has to get above that level. Once it turns in the 200 simple moving average at 629, that'll be a signal that it's ready to head higher. It's tried, it keeps trying to turn that level into support and failing. Once it does, then it'll be finally the signal that it wants to head higher. There's some trading between the middle Bollinger Band and the 200-day simple moving average. Just keep in mind that if it drops back below that middle Bollinger Band and closes below on the day, it will be a risk to hold long. Okay, let's check out NOG. Okay, this is another one. It only closed up 5%. It's trying to heat up. Okay, so if you check it out here, it's hitting the middle Bollinger Band. Look at the big volume down here. So I thought that was pretty interesting. It had some big volume when it dropped down, and then it's been working its way higher, and it's hitting that middle Bollinger Band. If it can get above the $2 level, that's the huge level to break, and then just above is the 50-day simple moving average at 206. Notice there was a lot of trading in this zone. You have that 219 level. This is a big level as well, this 220 level, and so yeah, if it can get above that $2 level, that'll be the first step, and then above that 50-day simple moving average. As you can see, it got above that level on the 19th, and it failed to hold, and then there was that big gap down. If $2 turns into resistance, then that's going to be a major red flag, and it has to hold the 100-day simple moving average at 189. Notice how the gold line here was support and then resistance, and then it's trying to turn into support again. If it dropped below, that would be a big red flag. Also, you have the 300-day simple moving average at 182 here. It needs to hold that as well. Okay, so keep an eye on NOG. And then if we look at SMRT, mix it up a little bit here. Here's an apparel retailer. We've been, I showed a whole video full of retailers. Here's another one. It had the big spike in the pullback. You never like to see a big big long pullback like that. It go sideways and it held support, which was kind of impressive that it stayed in this zone the whole time. So keep an eye on it. If it can close back above this level, it's hitting key resistance for the high close from March. That will signal that give it signal more upside. But just above is the 300-day simple moving average. A close above that level would be a big clue that it's ready to finally head higher. If it dropped down and closed below this EMA 8, basically at 137, that would be a red flag. And then you have a gap over here. So between low of day on this candle and high of day on this candle, low of day on this candle. And so yeah, the red flag is if it came down here and tested this middle Bollinger Band and support failed to hold, that it would fill the gap. Okay, let's look at DSS. This is another one here. It's currently bouncing, so you can check it out. It had that nice pop back on not this last week, but the week before on the Friday, and so it had the big move. It got above the 50-day simple moving average. The candles worked back into the bands, and they pulled back really hard. They came back and held the middle Bollinger Band. So if that middle Bollinger Band at 122 holds, that would be a good sign. And then it has to get back above the 50 and 100-day simple moving averages. And so if it gets back above 137, okay, that's the gold line right here, that'll be a signal that it's heating back up. And then it's this high close here on the 26th that it would need to break back above. But keep an eye on it. Sometimes have the nice volume spike and then it pulled back and it's holding support. If it drops, if it fails to break resistance or drops below 120 support, it will not be a good setup. And then if you look at the 15-minute chart here for DSS, you can see it had the big multi-day pullback, and then on Friday it got above several key moving averages. It's basically trading above all the moving averages on the 15-minute chart except for the 100-day simple moving average up here, which is the big level to break at 142. Once it turns that level into support, it can head higher. It's also just below EMA's 4 and 8. It needs to get back above those levels at basically 135. So it's right there. It is above the middle Bollinger Band and the 50 simple moving average. So if both those levels hold at that 132 level, that's going to be a good sign that it could push higher. Look for that break above 142. It has to turn that level into support, similar to back here when it got above all the moving averages on the 23rd. That's when it had made a nice run. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the link below the YouTube video. Thank you.